Hello, I'm Jessica Amir from Bell Direct, and today I'm chatting with the CEO and founder of StockSpot, Chris Brycki. Chris, thanks so much for coming in.
My pleasure.
So market volatility has returned. It's back to its highest level since the GFC. Markets have copped a lot of heavy selling, but still over the long term, they're still looking quite solid and favourable over 5, 3 and 10 years. And we've also found that fully diversified portfolios also tend to even out some of these market kinks and a lot of this noise. But Chris, you've built your business on ETFs. So what are you finding are the best ways to diversify?
Well, first of all, you're right. It's a very nervy time at the moment, as it is whenever markets fall. So over the last month, this is February 2020, markets have fallen 8 or 9% around the world, which is one of the biggest monthly falls we've ever seen. It's a bit of a stomach churning fall if you only own shares, because it means that your portfolio has fallen by a significant amount. And it really shows more than ever the importance of diversification. Diversification is about cushioning your portfolio and making sure you're protected whether markets go up or whether they go down. And when we look at diversification for our clients, there's really 3 aspects that are important. So first of all, you want to diversify it across the whole market in terms of all the different sectors in the market. So you don't want all your money in mining shares or bank shares or telcos or tech shares, because often it's one of those sectors that will be hardest hit if the market falls. So you want to spread across all of those. And we do that through an ETF that gives you access to the whole ASX 300. Then you also want to be diversified across lots of different countries, because sometimes our share market in Australia won't be the best in the world, and it will be the US market or the Chinese market that will perform better. Again, ETFs allow you to invest in lots of different countries. And then finally, and probably most importantly when markets fall, you want to have defensive assets in your portfolio. Defensive assets include things like high-grade bonds and also gold. The benefit of these 2 assets is that when markets fall, they both tend to rise in value, which helps to protect or cushion your portfolio. February, as an example, when markets fell 8 or 9%, bonds were up 1%, and gold was up 7%. So by having those 2 in your portfolio, they are able to counterbalance or even up the market falls and really save you from suffering all of the losses.
Just picking out some particular ETFs now. So we've spoken about the importance of diversification and access to bonds and commodities as well. Can you call out some specific examples of some ETFs that you really like?
Sure. I mean, the fixed interest space is a great example at the moment because it's really gone through a lot of growth in the ETF market in Australia. It used to be very difficult for Aussies to access fixed interest securities because you had to buy whole bonds, which might cost you $100,000, which really put them out of access for a lot of people. Now what's really fantastic is through ETFs, you can buy very small amounts of bonds. So every day we're investing in $1,000 or $2,000 worth of bonds for clients. And this isn't just investing in the bonds of one company or one country, but actually an ETF that spreads your money across hundreds of different bonds. What that means is that if one company doesn't perform as well or defaults on its bonds, you're well diversified and you don't really risk a lot of your money. As an asset class, bonds are fabulous because when shares go down in value, every time actually in the last 7 years when shares have gone down on an annual basis, bonds have risen in value. So they're a proven portfolio protection tool. And we like the most diversified bond ETF in Australia that gives you access to high-grade diversified bonds.
Well, thank you so much for sharing your insights, Chris.
My pleasure, Jessica.